Welcome to The Explainer. Today, we're diving into a massive shift in finance, all based on Accenture's Banking 2026 report. Think of this as your guide to a future where, honestly, all the old rules are being thrown out the window.
Forever, banking has been defined by its limits, right? By its physical branches, its old tech, its regulations. But those walls are coming down, and it's opening up a whole new era of unconstrained possibility.
And just to be clear, this isn't some small incremental trend. The report says it loud and clear. We're talking about a fundamental rewrite of the rules of money itself. Okay, let's get into it.
So the heart of this whole transformation is that money is, it's evolving. We're watching it go through this three-stage evolution that's making it way more intelligent, way more active, and frankly, more powerful than it's ever been. It all kicks off with how money is stored and moved. That's where new digital currencies come in. From there, it gets a brain, so to speak, through programmable rules. And the final stage? That's what the report calls agentic money. Money that literally goes to work for you, all on its own.
Now, this slide is really interesting because it breaks down the three big players in the digital currency game. You've got stablecoins, which are issued by private companies. Then there are CBDCs, or central bank digital currencies. That's the government's version. And finally, you have tokenized deposits, which are pretty much digital versions of the money we already use, just living on a new kind of ledger. Each one plays a different part.
And the growth here is just wild. Adjusted stablecoin payment volume has been exploding at an 85% compound annual growth rate. I mean, to put that in perspective, it absolutely dwarfs giants like Visa and PayPal. This is not some little niche experiment anymore. This is a systemic shift happening in real time.
So that leads us to stage 2, which is where money gets a whole lot smarter. With programmable money, you can set up payments to happen automatically when certain things happen, like an invoice gets approved or a shipment hits the docks. No more manual steps.
And this is not just a theory. It's already here. Take Siemens, for example. They teamed up with JP Morgan to use programmable money, basically automating their entire treasury. And the results? They cut their bank accounts in half and saved over $20 million a year. That's the kind of power we're talking about when money starts to think for itself.
The last stage in this evolution is what they're calling agentic money. The best way to think about this is like having a little AI-powered financial assistant that works for you 24/7, always making the smartest moves with your funds based on rules you've set up. We're already seeing little hints of this out in the wild. Amazon is testing a feature called Buy For Me, where an AI agent can literally handle a whole purchase for you on some other website, and you never even have to leave the Amazon app. That's the start of a world where transactions are totally automated.
Okay, so with this whole evolution of smart money happening, what does it actually mean for banks? Well, as we're about to see, the stakes are incredibly high. This whole transformation is creating massive risks for anyone who stands still. But at the same time, it's creating enormous opportunities for anyone who leans in. You really do have to be thinking about this right now.
Let's put a number on that risk, a really big number. By 2030, the report estimates that $13 billion in B2B cross-border transaction fees could just disappear from the traditional banking system and move over to these new methods.
And this slide right here shows just how big that reversal could be. Right now, traditional banks handle about 2/3 of these corporate payments. But by 2030, that could completely flip on its head, with the new, non-traditional methods taking 2/3 of the pie.
But here's the flip side. This new world brings new dangers. A huge 78% of financial institutions are expecting a significant jump in fraud because of these new systems. The risks are climbing just as fast as the opportunities.
So, the big question is, what do you do about it? How do you respond? Well, the report lays out a really clear 4-step playbook for banks to get ahead of this and turn all this disruption into a real advantage.
It really boils down to these 4 actions. You've got to define your strategy, upgrade your core tech, focus on what your customers actually want, and get ready for agentic payments. This is the new foundation.
First things first, you have to decide where you're going to play. Are you going to be an issuer, creating your own digital currencies, a custodian, acting as the super secure vault for these new assets, or a facilitator, making all the transactions happen smoothly? You have to pick your lane.
Second, and this one is absolutely critical, you have to upgrade your core technology. The report says it perfectly. Smart money
cannot run on brittle legacy systems. You just can't build the bank of the future on tech from the 1980s. It won't work.
Step 3 is all about focusing on what your customers really intend to do. And there's a huge disconnect here. The research shows that 69% of corporate clients are saying, hey, we want digital currency wallets, but most banks aren't even aware that demand exists.
And closing this gap isn't a one-and-done thing. It's about building a new muscle inside the organization, one that constantly learns from your customers and adapts to what they need in real time. That's how you win their business and, more importantly, their trust.
And finally, step 4, embrace agentic payments. And listen, this isn't some far-off dream. 57% of business leaders believe this stuff is going to be mainstream within the next 3 years. The clock is already ticking.
The goal here is to build that secure, AI-ready foundation that lets your customers program their own money, letting them create custom rules and automate their financial lives, with you right there at the center of it all.
At the end of the day, this transformation is coming, with or without you. The future of money is being written as we speak. So the only question left is, will your bank be one of the ones holding the pen?